Hey, good afternoon, everybody. Going to go over our Forex trades for today, Wednesday, January 7th. We had three trades, and we'll go over them here shortly. We did get CPI data out from the Eurozone. That came out at 5 a.m. Eastern Standard Time, which showed collapsing uh, consumer prices. So, was that to be expected? I mean, we certainly were not surprised. I guess some people were surprised. But markets around the world rallied from Europe and then here in the States as far as equities are concerned. Even though oil was looking down again early this morning, really, I guess we would have to say it's more of the institutional investors and the so-called smart money looking at central bankers and looking at the Fed to keep interest rates extremely low, and possibly even restart QE here in the States if things get bad here in the States. Europe has pretty much started a QE, although they're not calling it. Everyone expects them to start calling it either this month or next month. So here we are, the same old stuff over and over again. Bad news means central bankers, the Fed, will keep interest rates low, extremely low, at all-time lows, and possibly even start a QE, which we've done here in the States. And even though they claim they've ended it, and our opinion that we feel they haven't ended it because there's no mandate for the Fed to give the money back that they've used to the government that they've used to buy these different instruments, CMOs and whatnot, to the tune of $4 trillion. So without a mandate, it's telling you that QE hasn't truly ended. And here we are. Europe pretty much started a QE, even though the world's not calling it. But like I said just a minute or so ago, everyone expects the world to start calling it a QE sometime in January or February. So that's why equity markets rallied. Obviously, some of the currencies were impacted. We did have an Australian dollar Japanese yen trade, which we got off yesterday right around lunch. That's what you're seeing here. The short came in nicely. We were short 96.157. You can see it came in. It bounced around, came in a little hard again. We picked up 28.1 pips. It did eventually collapse. Not collapse, but it did come in more than that. Came in another 20 or 30, 25 pips from where we covered. So, but we'll take it. Nice trade. Adjusted for size, it's 8.4 pips because we had about 30% of our normal position. So, overall, a solid trade. U.S. dollar Swiss franc. This was an order that we had out there that got filled right around that 5 o'clock, maybe 5:30 in the morning, which we weren't in the office. But as soon as we came in, we were in the office about 6:45 a.m. Eastern Standard Time. We just liquidated the position. We had about 25% of our normal size on the U.S. dollar Swiss franc. We were long this 1.01455. As soon as we came in the door, we had the computers on. We saw it was 1.0157 and change. We liquidated, picked up 11.5 pips, adjusted for size 2.9 pips. We wanted to be out before any other data came out here in the States, which there was some more data. So was it the right move? I don't know. I mean, our call is for to run up to the figure of 1.02. Here it is. It came up to 1.01755 or so, maybe 1.0176. So we definitely got out a little early, but we also playing a little bit on the conservative side. This was another one. This was not another one. This was a pair, and when we announced it to everybody many hours ahead of time, this is buying a year high breakout, which we're not fan of. We're not fans of buying into a new year high or shorting into a new year low. We'd rather play it where it has contracted and consolidated and starting to move back in the overall trend. So we weren't a big fan of it, and so when we announced it, we were even saying we were going to play it for just a quick scalp. We didn't want to get caught in a false breakout at a year high because those can be very bad scenarios. So we picked up 11.5, like I said, adjusted for size 2.9. Not the worst thing in the world. Better than a sharp stick in the eye, right? U.S. dollar Japanese yen. This was a full out scalp trade given by our indicator. We were long 119.218 and popped. This one we definitely got out early. Picked up, we got out 119.290, picked up 7.2 pips. They look like there might be some resistance. You have these tops here from yesterday. You have all this congested area coinciding with that tops. So that's why we got out where we got out, looking at 119.30 or so. Busted right through that. I mean, literally busted right through it. Within less than 10 minutes, the thing ran up all the way up to 119.50. And that's pretty much where it is right now, 119.47. So we definitely left some on the table there. We could have pieced out, but it was a pure scalp. On pure scalps, you're looking for nothing huge, 3, 5, 8, 10, 12 pips, whatever it is. Could have very easily ran into this congested area, hung around, and then fallen back down. So we'll take it. Like I said, it's a full-size trade, so we'll take it all day long. So 3 trades, picked up 18.5 pips. Pretty solid so far. Best day of the month. Nothing fantastic, but still overall solid. So that's it. We're going to wrap it up. If you're still trading now, good luck. If any signals come out, they'll be coming your way, and we'll be looking to trade again this evening and tomorrow as well. So have a great, like I said, if you're trading now, good luck and have a great rest of your day.